Greetings and good day. I hope you're doing great. I'm with you for the daily analysis of the Euro-USD currency pair on March 16th. As we witnessed, this currency pair recorded a drop of over 1% last week and finally closed in the price range of 1.1410. The drop over the last 2 weeks followed the ongoing war tensions between.
Learn and enter the world of binary option with us. Binary option indicators, powerful strategies, learn, trade, win. Level up your trading.
Iran and America, which simultaneously caused the dollar to strengthen. Following the strength we saw in the dollar last week, the dollar index reached its highest level since last summer, and now with the start of this week, it has pulled back slightly from this level. Following the drop we saw in the euro-dollar pair last week, the price went even lower than its daily order block, and after filling the high time frame FVG area, it reacted to an older daily order block. Now, with the start of this week, the price opened with a 0.12% growth compared to last week and is now trading in the range of 1.1446. At the end of last week, we saw that it brought no peace to the war in the Middle East, and the US and Israeli militaries continued to bomb strategic targets in Iran. Now, in Washington's latest initiative, there was an effort to form a naval group to escort convoys and ships through the Strait of Hormuz, and the US asked various countries to help with this. But even this news couldn't significantly affect the energy market, and we still see the energy market and oil prices trading near their peaks. We are reviewing the economic calendar. Regarding economic news that could have a major impact on this pair, we won't have any important news today or tomorrow, but on Wednesday, we'll have PPI news for the US dollar as well as the important Federal Reserve meeting. By examining the currency strength chart, we can see that last week the US dollar was one of the strongest currencies in the market and was trading with more strength than the euro. But on a daily basis, we consistently observe that the euro's strength currently remains in the medium range, while the US dollar is currently trading as the weakest currency in the overall market. One of the main reasons for this weakness is this week's Federal Reserve meeting, as traders usually reduce their risk before the interest rate announcement, causing demand for the dollar to temporarily decrease. We can also consider that some traders are currently taking profits from the dollar's growth, which also contributes to the decrease in demand for the dollar. We are examining the 4-hour time frame. We see that this currency pair is still in a downward trend. After reaching a low last week, the price opened with a slight increase following the dollar index's pullback, but the growth wasn't enough to create a short-term upward trend. In our last analysis for the EURUSD pair, we predicted the price would rise, react to the 1-hour FVG level, and then drop. We saw the price move exactly as expected. Now, based on what's been said, we can consider that the downward trend formed in the euro-dollar price might enter a range phase. However, until an improvement is seen in the Middle East crisis, we can't expect a significant weakening of the dollar and the start of a bullish trend in this pair. So, in this way, we'll try to enter trades for short-term targets in the liquidity zones that exist near the price. As a short position, we can wait for the price to reach the 1-hour FVG area. Once we see rejection and the price's reluctance to move higher from this zone, we'll enter a sell position targeting lower liquidity levels. Good luck and stay profitable.
Do you know why your profits are smaller than your losses? Because you don't analyze your trades, you just execute them. Download the Trading Journal app for MetaTrader 4 and 5 for free now.